everyone, Dave Landry here from DaveLandry.com. This is Reflection 2020, a year in review. When StockCharts.com asked me to do this video, I jumped at the chance. One, because I had a lot of great lessons in 2020, and I was able to show you what I was thinking and how it played out, good, bad, and indifferent. And we had some really, really great examples. Market timing, IPOs, trend following, a lot of the things with ACP indicators, etc. And we're going to get to that toward the end of the presentation. But I got to thinking, I've already sort of done that throughout the year. And those links that I just showed you in the first slide have a lot of reference material on that. And you can go in and watch all those shows. I thought it'd be more important to tell you what I did wrong. And 2020 was actually nearly a year of my demise. Now, I have a client named Dr. John, and he does really well with my stuff, and he does a lot of the trend following. He takes a lot of ancillary setups, and he's been with me for about 14 years, and we've become very friendly over the time. He does like to day trade on occasion. He has an affinity for it, and in 2020, he began scalping quite a bit, and he was printing money for a while, and he took an account, and he nearly tripled it, and then he nearly halved it. And on the way down, we were talking quite a bit, and he said the 6 most dangerous words on Wall Street. But it was working so well. And a lot of things that I shouldn't have done, were working so well, and that was part of my problem. Now, in the case of Dr. John, and it could be partially what happened with me, was, as Linda Rasky once said, right when you find the key to the markets, they change the locks. And if you take a look at the volatility indicator, this is Landry volatility, which is just 50-day historical volatility, and you can get this in ACP. Notice that the volatility imploded after about the middle of the year, and the volatility not only imploded, it's about 1/3 of where it was, and that's why the scalping was working so well, and a lot of the things that I had discovered nearly after the fact were working so well until they didn't. Anyway, and talking with Dr. John, about a month later, he called me up and said, "Have you seen Molly's game?" And I said, "Yeah, it's been a while, but I've seen it. What's up?" He says, "Well, remember the character in there that blew up, went on tilt?" And I said, "Yeah, I do." And that night I actually went in and rewatched it, and I actually began to sweat, because just like the character on tilt was Dr. John, the character on tilt was also me earlier this year. Now, the character in the movie, Mr. Scheibel, and there's a hidden joke in there, FYI, in case you're wondering, he was a very good poker player. He took a lot of money from a lot of players, and as Molly Bloom described him, he played poker while others gambled, and he did that until one night, and he was up about $150,000, and he was up against a rookie player. Well, he didn't know he was a rookie player. The rookie player's name was Bad Brad. And Mr. Scheibel, played correct poker based on what he was reading from Brad. And turns out of sheer luck, Brad won $40,000. Well, he could have gone home at that point and still been $100,000 ahead, but he went on, as poker players call it, he went on tilt. And as Molly Bloom described him, he abandoned everything he knew about poker and was playing like a frat kid, swinging for a home run on every hand. So Mr. Scheibel was like my good friend and client, Dr. John, and also was a bit like me. Now, part of my problem this year was a lot of these, as I call them, the phone traders, the Robinhood traders, were just absolutely printing money. The gentleman that did the work on our house, the woodwork on our house, also did the woodwork on the house next door. And when he was working on the house next door, we hollered across porches. We talked trading every now and then, and he had just started trading off of his phone. And he texted me a few weeks later and said, "Hey, I'm up 40% for my first month. Is that good?" And I'm kind of rolling my eyes. I'm like, "Yeah." And so I got on, fired up a spreadsheet, and I did a quick calculation. And if you made 40% a month, in about a half a year, you'd be up about $500,000 or so. And about 2 years later, you'd be up about $53 billion, starting with, let's say, $10,000. So I think part of my falling into the rabbit chasing, so to speak, was based on the fact that these phone traders were making all this money. And I would go to like the Robinhood Top 100, look at that list, and I was chasing down some of those rabbits. Now, I was doing really well. It's kind of like, but it was working so well. Well, I preach against day trading because it puts a lot of stress on you. Anytime you're forced to make a lot of decisions under pressure like that, what it does is it really wears you down. And this is why the burnout rate on inner city ER doctors and air traffic controllers is so high. And at one point I realized, I don't want to be the richest man in the graveyard. And when things started to come unglued a little bit, I began to think, well, I don't want to be the poorest man in the graveyard either. Now, one thing I often preach when it comes to trading psychology is that your life is going to spill over to your trading, and your trading is going to spill over into your life. So if we talk about trading and behaviors that could influence your next trade, it could be a string of winners. I know it goes to my head when I have a string of winners. I'll show you that in 1 second. You could have a string of losers. That's pretty tough too, right? You could have missed a really huge gain. You could have taken a way too risky trade and it paid off big, which will tempt you to take the next trade, which is way too risky. And then that's when, of course, you lose a lot of money. Others seem to be printing money. And this is what kind of goaded me this year into a lot of the bad behaviors I preach against, is that I was watching Dr. John do this scalping and just print money. I was watching some other clients. One client made 6 figures plus over not 7 figures, but 6 figures, over 6 figures, in a very short period of time. And that's kind of tough seeing all these others doing so well. And by the way, this is the only business, getting back to like the phone traders, where you could work at it for many, many years, decades even, and then all of a sudden somebody comes along and they're running circles around you. Now, you may have fat figured a trade, or you will fat figure a trade, I can tell you that, or missed your initial profit target, or maybe let a stock blow through your stop, or fear. And fear is when you don't realize the risk, or you haven't fully accepted the risk. And that's sort of channeling Mark Douglas on that. Now, let's talk about a few things in life. You could have a fight with your spouse. You could have a fight with your significant other. You could have a fight with both. And if you have a fight with both, you're probably under too much stress. You probably should not be trading. But hey, who am I to judge? You could have an unexpected expense, and you could have an expected expense. It's amazing. A while back, I cut out about $1,400 worth of monthly expenses. That was 3 or 4 months ago. I should have an extra $5,000 in my checking account. I checked and I don't. So where does it go? There always seems to be some kind of unexpected expense. And even expected expense can cause a lot of stress. And you feel like, well, maybe I'll try to take that out of my trading account. Maybe I can make that in my trading account. I just ordered a Christmas gift for my wife, and I'm like, where am I going to get that money? Where am I going to pull that money? I'm like, oh, I'll go in and trade. No, bad idea. Anyway, you could be hungover, you could be tired, you could have injury or illness for you and a loved one, and it doesn't have to be that big of a deal. My wife sprained her ankle a couple of months ago, and it was very slow to heal, and she could no longer exercise like she normally did, or walk places and do some things that she was used to doing, and it made her a little crotchety, and that kind of spilled over into my life too. You could have bad results for you or a loved one, bad test results. A few months ago, I had really bad test results. A doctor tried to reach me all weekend, couldn't reach me. I'm pretty bad with the cell phone, as I think my clients know, and I'm working to get better at that. Finally, on Monday, the nurse reached me and was like, "Are you okay?" She was surprised that I was upright. Now, what's crazy here is my father, a few years ago, not to be Debbie Downer on you, but a few years ago, he had very similar results, almost exactly, and he was dead in 3 weeks. And so my wife and I sat around and looked at this, and we realized that the writing was on the wall, and we began to get our affairs in order based on this. And then luckily the next day, the story does have a happy ending, turns out the tests were a fluke. But I have to say, the next day, or after I found out the results, it was very tough to trade. So life spills over into trading and vice versa. And it could be any major life event, good or bad. Again, something even as minor as spraining an ankle. My wife owns her own business, and not every day, but many days, there's a gap in her work. It might be an hour, 2 hours, 3 hours, or more. And during that gap, she'll come home, we'll have lunch, we'll go exercise, we'll go for a walk, bike ride, whatever, or just visit for a little while. And I noticed when I was caught up in my monitors, hunched over, looking at the flickering ticks, as David Keller calls them, based on, I think, Todd Harrison called them that once. And one day I realized I hadn't seen her in a long time, and I'm like, hey, are you really busy? She says, oh, I don't come home anymore. And that was part of the realization that my trading was spilling over into my life, and maybe I need to stop chasing those rabbits. Now, all of this reminded me of Joseph Campbell's hero's journey. And there's a little more to it than this, but essentially the hero has a call to adventure, and along the way he has trials, tribulations, and challenges and temptations. Sounds familiar, right? 2020. And at some point he reaches the all is lost moment. If you look at classical literature, you'll see a lot of all is lost moments, Odysseus, and more modern times, obviously Luke Skywalker. And just next time you watch a movie, notice that the hero hits the all is lost moment. But from that comes epiphanies, revelations, transformation, treasure, and he returns the boon. Now, the all is lost moment could best be described by Steve Pressfield, as he said in his book, The War of Art, little play on words of the art of war. It's not a book about trading, it's a book about resistance, which makes it a book about trading, because you're going to encounter a lot of resistance in trading. And he defines the all is lost moment as, at this point, the hero is facing maximum resistance. He is as far from his goal as he could possibly be. Paradoxically, he is also on the threshold of a breakthrough that he has been seeking. What he must do is change, and the changes of consciousness as much as of action. Now, it's very philosophical to talk about the all is lost moment and be a little Nietzsche and say, oh, what doesn't destroy me makes me stronger. But when you're in the depths of despair like that, it can be really tough. And I think we've all been there as traders. And that's one reason I want to share my story this year with you. And it feels a lot more like, as Norm Macdonald says, what doesn't destroy you makes you very, 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 very weak. Well, I finally came to my epiphany and realized that if I were to have the epiphanies, revelations, and transformation and get the treasure and be able to return the boon, I would have to come out of this all is lost moment. Now, that sounds a little egotistical to talk about returning the boon, a little altruistic, but I really want to leave a legacy, and I can't leave a legacy saying, okay, this is what you do. You get in front of a screen, you get hunched over, and you bang on the keyboard all day like the rat going for cocaine, okay? Ruin your eyes, stress yourself out, and die very young, ruin your home life. Or you follow the trends as I preach, put together a plan, follow your plan, and trading, not all the time, but often will be boring if you do that, and if it's boring, you're doing it right. Another one of the times I realized that I was certainly a little hyperactive is when one day I was on the phone with Dr. John and I saw a jump in my equity. I wasn't even sure what stock did it. I was in so many different stocks. And I told him that. And he goes, well, you're sure chasing a lot of rabbits over there. So he, outside looking in, could see that I was getting a little hyperactive and the wheels were starting to come off the bus a little. But I was still doing good at that point. So what I would encourage you is be careful when you're chasing those rabbits, because you might end up in a rabbit hole. And that's both mentally and monetarily. And of course, if you're losing money, it's going to affect you mentally. And if you are not of the right mindset, you're going to probably lose even more money. I think my realization that I was chasing too many rabbits came when one day, although I preach against day trading, okay, I had placed 13 day trades in a row. And I think around 8 or 9, I'm like, there's no way I could be this unlucky. I'm a bit of a bit gullible when it comes to clickbait. When I was looking for the Molly Bloom video, I was recommended a Phil Hellmuth video. And to those of you who don't know Phil Hellmuth, he's a famous poker player, and he's known for his occasional brattiness and occasional blow up. And in this particular game, he was playing against someone which was a little bit more of a rookie than him, and he made a snap call, meaning that he was called and he immediately threw his call back at the guy. And they called it, the announcer called it, Phil Hellmuth made a I can't be this unlucky call. And on that particular day, like I said, at probably around trade number 7 or 8, I'm like, there's no way I can't be this unlucky. Sooner or later, I should start winning. Well, you're probably wondering, with all my preaching against day trading, you're probably thinking, well, how did I get here? Well, it was my ego. I saw these phone traders were running circles around me. There were some of my super active clients, including Dr. John, were printing money. And then one guy in particular had made about 6 figures, well over 6 figures, I should say, over a short period of time, being really, really active. And I did find some keys, and I kind of slipped back into grail hunting mode. Now, if you go back to that volatility screen, when the volatility was at least 2 or 3 times higher than it is now, I found a lot of intraday stuff, like my bow ties and things like that. Daylight, or Landry light as we now call it, would have printed money in ETFs. And I actually did print money for a little while in the ETFs. And it worked until, of course, paraphrasing Linda Rasky, they changed the lock. And at that point in time, I was like, well, but it was working so well, as I admitted earlier. I was viewing the market as a bit of annuity, and that's quoting Peter Brandt. And he's sort of channeling Livermore and others who say that don't expect the market to give you a steady paycheck. Now, what happens is, especially with me, when my equity begins to grow arithmetically, my ego grows geometrically. And in this graph here, you'll see that the ego kept growing even though the equity began to shrink. And that's because I was a little too caught up in, but it was working so well. Now, what happens is you reach the peak of denial, and then that's when your ego comes crashing down. You have that all is lost moment, and then you begin to slowly work your way back higher. Now, when this happens, at least for me, and in this particular instance, my ego's coming back, but not quite as much. You know, what was it? My cousin Vinny, I could use a good arse kicking. You know, maybe I needed one. So let's talk about the comeback. Now, if you've been on Earth for more than a day, you probably know that experience is what you get right after you needed it the most. And a couple of months after my all is lost moment, when I was on my comeback, I was listening to Unknown Market Wizards, and the Peter Brandt interview is one that really struck a chord with me. And he talked about his own drawdown and that he had earlier in his career. And he said, you know, if I'm going down with what I know how to do. Amen, my brother from another mother. Now, again, at the all is lost moment, my wife one day, and you guys who weren't married, you probably don't know this, but you guys that are, your wife can ask a lot of tough questions. And the question she asked was, are you trend following? And by that, she meant, am I following my core methodology? And every day she comes in right before work and tells me goodbye, gives me a hug or whatever. And then as she walks off, she often will turn on a heel and say, trade like a champion today. And that constant reminder started to eat away at me when I realized that I was no longer trading like a champion. Obviously, I stole the idea of this sign from Notre Dame, their little tunnel and run through from the movie Rudy is where I saw that first. Every morning I write morning pages, which I'll talk about in just one second. And one of the pages, similar to what Brandt said, I wrote, do what I do when conditions are conducive and wait patiently when they are not. This reminds me of many years ago, a couple of decades ago actually, showing my age, where I was lucky enough to hook up with some old school traders. I guess I need to stop using the word hookup. It means something different today, evidently. It's like my daughters. Did you hook up with your boyfriend? Dad? It's like, well, you know, did y'all see each other, you know? Anyway, long story endless. I would provide a lot of my research to one person in particular, and I was kind of on the grail hunt back then, as I kind of went on a little bit earlier this year, truth be told. But anyway, he didn't really get too excited about my research or whatever, and one day I kind of asked him, what's going on? And he says, well, you got to dance with the one who brung you, meaning that he was true to his methodology, and I truly believe that. Do continue to do research, but don't just give up on what you do, provided that it's conceptually correct. So dance with the one that brung you, very important. Now, one thing in the hero's journey is the all is lost moment. It's very philosophical. Luke Skywalker and Odysseus, way back from classic literature, and just name your favorite hero. It's great in movies and it's great in literature, but when you're living through it, it's pretty tough. And yeah, let's get philosophical. Oh, that's when you have your epiphanies and revelations and transformations. But the reality is it's really tough. And it's kind of like, well, it's supposed to be like this Nietzsche moment where what doesn't destroy me makes me stronger. Well, it's more like, as Norm Macdonald says, what doesn't destroy me makes me very, very, very weak. And one day in my morning pages, as I'll talk about in a second, I wrote, so let me get this straight. I'm going to give up 20-something years of hard work to achieve this level of freedom and just give it all up chasing rabbits. So I think it's great from a philosophical standpoint to talk about the all is lost moment, but just make sure you come out of that all is lost moment so you can get to the epiphanies and the transformations and everything else. Now, one thing, again, that I got a little bit too late was listening to Unknown Market Wizards. Peter Brandt and others talked about how they wish they would have documented their trades much, much better. And if you document what trades you're doing, especially those that are outside of your core methodology, I think that's vitally important. And taking one step further, Peter Brandt talked about documenting his emotions, and I fully agree. And this is a little spreadsheet I developed, and I have a column for shame. So those are the shame trades. And I talked a lot about FOMO throughout this video, so I made sure I had me a column where I discuss, was there some FOMO in that trading day? Now, this is a snapshot of my morning pages. They're not always this productive. This one has a lot of ideas and things that I wanted to look into. Some days I just talk about the dog farting, but I wake up every day and religiously write 3 pages, and it's the best thing I've ever done in my life. And this really helps me to see where I am in that trader's journey, or that hero's journey, so to speak. Whatever's in your head, it's important to get it out. And I did these pages, or used to do them, I should say, 20-something years ago, and for some reason I stopped. And then in more recent times, about a year and a half or so ago, I read The Artist's Way by Julia Cameron, and she recommended doing these morning pages. And you basically just write 3 handwritten pages every morning. And that was really instrumental in my comeback. Speaking of the comeback, let's talk a little bit about what I did right throughout the years. Now, I grabbed an equity snapshot, and I grabbed the snapshot at the trough of my equity and my most active account. And one of my slightly less active accounts, where I do mostly the position trades, and I wasn't as tempted to fire off those day trades, the equity curve looks a heck of a lot better. In fact, it's actually hitting new highs. But in this active account where I was sort of blowing up, this is what it looks like. And you can see to the left, it's pretty obvious that I was chasing those rabbits and grail hunting off to the left. And then to the right, I got back to being a trend following moron and just following my core methodology. And I realized once again, quoting Peter Brandt, that the market is not an annuity. I stopped chasing the rabbits unless there was money lying in the corner. And that's what I call a money lying in the corner trade. Channeling Jimmy Rogers is just wait till there's money lying in the corner and walk over and pick it up. Well, it's not always this easy. But if you wait, every now and then it can be. And a few weeks ago, we had the mother of all ogre days, opening gap reversal days. And this is an intraday trade that I do trade. And I don't consider it too far outside of my methodology, because I'm looking for something that's already set up, and then I'm looking for that opening gap reversal to play for a day trade. Anyway, we had several of those set up. In the next few days, we had 1 or 2 set up on subsequent days. So it was a really good period of time. And now I'm mostly going back to waiting as far as that's concerned for those day trades. We also had quite a few really good core methodology type of setups, pullbacks, and other things that I follow. This is my spreadsheet that I track the open model portfolio in. Now, these trades are easy for me to take, and it's not easy to trade, but this is the easiest thing I do when it comes to trading, at least. It's like I know what positions I need to be in. I know where I need to get in them. I know where I need to get stopped out. Literally, filming this video, one stock's going against me, and I went and checked the portfolio. I was like, okay, well, I've got to give it another 2 more points. And it's like, I put in a hard stop, and now I'm back to my life. So I would encourage you to do your own trading plan. And as I've said before, I do the service for me, with you in mind, of course, but I do it for me, and being forced to do it for you forces me to do a lot more work than what I would do on my own. As I've said quite often, maybe after a really crappy day, I'd want to go get a beer, as opposed to sitting here for another couple hours, banging on the charts, banging on the keyboard, looking at a couple thousand charts. So very important, obviously, to do your homework, follow your core methodology. The other thing that happened is that we had a lot of these really good IPOs set up. In addition to the core methodology, we had a few really nice winners, a couple of 100% winners that showed up. Like a lot of these IPOs turned out to be really good. And a lot of these stocks were mentioned as mystery charts. And I also talked about the bull market and IPOs over the last several weeks. And you can find those on my website, DaveLandry.com, or on my YouTube channel, YouTube/C/Dave Landry. So the bull market resumed in IPOs. And luckily, I use the word luck because I should not have missed it, and I did not miss it, but I could have easily missed this happening if I was busy chasing rabbits. Now, I did stay long in the bull markets of 2020. There were 2, okay? I was short in the bear markets and mostly out of the choppy market. So if you look at this graphic, you could see coming into the slide, we were mostly long. We had a couple of shorts on, and then those longs began stopping out, and then we began getting more and more and more short. If you notice the overlay that I did with the number of shorts versus long, the net number of shorts versus longs, you'll see that it made a V-shaped recovery. It almost perfectly mimics the market, except that it's skewed a little bit to the right. And the reason that is because in trend following, you're going to be a little late to the game. In order to follow a trend, you must first have a trend to follow, and I believe that's Greg Morris who said that. Now, I also paid attention to signs and signals. We had a TFM sell signal earlier this year. The market dropped about 30%. You could argue, well, it was a whipsaw because the market went right back up, and you got a buy signal right about where you got a sell signal. Well, that's true, but following this signal you would have avoided about a 30% drop. And a lot of my friends and family were a little freaked out when the market was dropping, and they're having their, oh my God, diaper change moment, which the system is designed to avoid. And again, watch the videos that I talked about for more on that. And then all of a sudden, when the market came right back, they're like, well, I'm glad I held on. And in some cases, they wish they would have held on. And those who held on are like, buy and hold is the best thing ever. But a few months earlier, they were freaking out. Well, buy and hold will work until it don't. Not to digress too far, but that's another lesson of 2020 is that the market can be a bad teacher. I can promise you it won't always come back like it did in 2020. But if you're following the signs and the signals and indicators, a few indicators like I do, such as the bow ties, we've got a sell signal back in February, and then you follow the proper order like I have in this chart and follow other things like Landry light, it'll stay green and help to keep you on the right side of the market when the market's going up, and it'll stay red and help to keep you on the short side of the market or out of the market when the market is going down. So to summarize the comeback, let's talk about what happened. Well, I realize once again that the battle is within, okay? And you have to recognize, like life, trading is fragile. And here's the thing I wanted to come across today. You got all these YouTube gurus out there telling you about all this get-rich-quick stuff. Ironically, I just had a video recommended to me. One of them is being sued for $137 million. So, I guess the chickens are coming home to roost, but that's a different story. But I want to let you know, don't let these people shame you, okay? We all struggle. And I would never be Schadenfreude, but in 2020, there's been many famous hedge fund managers who had a lot of difficulties, people such as Dalio, who I have the utmost respect for. Now, one thing in listening to the Unknown Market Wizards, not the last week at Bandcamp you, is that in a couple of cases they talked about, well, I had these positions on and the risk control manager came over and shut them down. Well, we don't have that risk control manager as private traders, so you have to be your own risk control manager and you have to hold yourself accountable. I would encourage you to share as much as you can. I have a Facebook group and I share all the trades that are within my core methodology, and I could guarantee you if I'd have shared all that rabbit chasing that I was doing, I probably wouldn't have done all that rabbit chasing, because some of my members would say, well, let me get this right. You preach not day trading, and there you are day trading like the little rat going for the cocaine, pushing that button. So along the lines of sharing, I had a client who would do really well following my stuff. And, he had the ups and downs like we all do, okay? But he would also the wheels would come off the bus a little bit. And he'd do a lot of day trading. Sounds familiar, right? Anyway, I told him, I said, would you be willing to share my trading plan with your wife and tell her that you're going to follow it? And here's the exact plan. And sometimes it works and sometimes it doesn't. And there'll be a lot of drawdowns along the way. But overall, we should do okay with this trend following thing. And then also show her, and by the way, honey, I'm doing all this shoot from the hip day trades over here too. And I'll never forget what he said. He said, oh no, that would end the marriage. So that's the great epiphany about trading psychology is, if you've been at it for a little while, of course, you know what you're doing wrong. Now, the big lesson, again this year, and I shouldn't have made such a rookie mistake, is that FOMO is a biatch. And seeing people make a lot of money really goaded me into doing that. It's my fault. I'm not blaming anybody else, but I know that I gave in to the FOMO, and that's why I put FOMO in that column. So I would urge you to do what you do well, even if others seem to be printing money doing other things. And if you want to do those other things, document them, and make sure you do them in a very small portion of your account. And also be cognizant of your emotions. Make sure that trading isn't making you crazy. Early on, like I said, when I was doing really well with it, it was great, but emotionally it was really taking my toll. So speaking of emotions, be cognizant of your emotions with trading and in life. And again, document those emotions. So the summary of the summary is, for the comeback, is follow your system. I want to thank everybody for watching. Again, if you need follow-up information, davelandry.com/StockCharts. If you need to reach me, davelandry.com/contact. Again, thanks for watching, and may the trend be with you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.